You're welcome to my channel. We are still continuing with topic 4, income tax. Yeah, and we were looking at business income. Yeah, in our previous video, we introduced what business income is all about. So in this video, we are going to just be continuing. Yeah. So for income tax purposes, business is defined to include any trade, profession, vocation, or adventure in trade. The Income Tax Act widen the scope of incomes taxable under the business definition such that trade is just one of the taxable sources. So, for income tax purposes, business includes these four things. It includes trade. Trade, we said, is the buying and selling of goods and services. Then it includes profession. A profession usually involves an academic training over a long period of time. Over long periods of time. That is what we call a profession. Then it also includes a vocation. A vocation. A vocation is simply a calling or something one does because he or she has special fitness for it. For example, boxing, football, that is what we call a vocation. So for income tax purposes, business includes trade, profession, vocation, and adventure in trade. Yeah. The Income Tax Act defines business income for tax purposes to include gains on disposal for business assets. It includes cancellation of business debts, consideration for accepting a restriction on a person's capacity to carry on business, proceeds from disposal of trading stock, value of any gifts derived in respect of a business relationship, past, present, or future. Then interest, rent from business, which is wholly or mainly the holding or letting of property. Yeah, so this is what business income entails of. Yeah, the gain that you get after selling the capital good or the assets. It's regarded as business income. Then cancellation of business debts in case your debts are cancelled. It's business income. Consideration for accepting a restriction on a person's capacity to carry on business. The money that you get by restricting someone from carrying on business, it's also regarded as business income. Then proceeds from disposal of trading stock when you sell stock like shares, yeah, shares and all that. The money that you get from it is regarded as business income. And in case you get any gift when you're carrying out business, it is also regarded as business income. Then interest. Interest in case you maybe lend someone money, yeah. Then they return the money with interest to you as a business. It is also regarded as business income. Then rent from business in case the business has rentals. Yeah, the money that it gets from rent is also regarded as business. So that is the composition of business income. Yeah. The following aspects are considered in determining the taxable business income. When we are determining the taxable business income, we mainly consider four things, and that is the exempt income, the allowable deductions, the non-allowable deductions, and then the capital deductions. Yeah, these are the four things that we consider. So we shall first look at exempt income. Exempt income, as you see, exempt, the excluded, something like that. Yeah. Exempt income. These exemptions are extended either to persons or incomes, both of which result into non-payment of tax by law. So exempt income is not taxed by law. Yeah, and these include exempt organizations, then listed institutions. Listed institutions according to income tax. Those are organizations that are listed on the first schedule of the Income Tax Act. Yeah. So income from exempt organizations is not taxed. Income from listed institutions is not taxed. Then exempt incomes, which include any education grant which the commissioner is satisfied has been made bona fide to enable or assist the recipient to study at a recognized educational, or research institution. So an education grant is also not taxed. Then any amount derived by way of alimony or allowance under any judicial order or written agreement of separation. It is also not taxed. Any amount derived by contribution or allowance under any judicial order. It is not taxed. Then the value of any property acquired by gift, bequest, divorce, or inheritance that is not included in business, employment, or property income. In case you receive a gift, maybe from your lover, yeah, it's not included in business, employment, or property income. It cannot be taxed. Then any capital gains excluded from sources of taxable income. Any capital gains excluded from sources of taxable income, that also not taxed. Then foreign income, foreign source income derived by a short-term resident of Uganda. It's not taxed. Interest earned by a financial institution on an agricultural loan. It is also not taxed. Then the income of a person derived from the operation of aircraft in domestic and international traffic or leasing of aircraft. Aircraft are things that work at the airport, things like that. So any person who derives income from operation of aircraft in domestic and international traffic, they are not taxed. They do not pay income tax. Yeah, income derived by a person from managing or running an educational institution, not taxed. Then income of a small business taxpayer whose annual turnover does not exceed 5 million. Yeah, when the business makes small money, does not exceed 5 million per year, it is also not taxed. So these are some of the exempt incomes. We have incomes from exempt organizations, income from listed institutions, and then other exempt incomes as we've seen below. Yeah, thanks for watching. Don't forget to subscribe, like, comment, share with your friends, and watch my next video, which I'll be looking at the allowable and non-allowable deductions in business income.